Hi everybody, and welcome to another day with Serene Education's Forex analysis with the four majors. Okay, I'm start with the euro against the US dollar. Let's have a look and see what's been happening. Okay, near term, spoken about that all important 1300 mark, and you can see price has collected or consolidated at that area over the past couple of days. A lot of indecisiveness as we've headed through this consolidation range here, and you can see we did exactly the same not too long ago at the start of January 2013. So we are now consolidating between 2 points, a prior support here near term through the latter part of February, and now you can see quite clearly yesterday's bounce, not very high indeed, but still nonetheless moving higher and using 1300 as a psychological support. So as it stands at the moment now, negativity is still in play. Okay, we are at a crucial support and resistance level in terms of that psychological round number 1300. However, you can see everything is still above price. Moving averages in particular, the institution, the major trend, okay, the green line that we've seen here, and most importantly our actual strategy template. The daily in particular still looking red. We had our last arrow which was red, all the candles are red, and the ribbon on either side is red. So it's telling us we should be looking for shorting opportunities. It's imperative now that this bounce remains quite flat. We'll go to the 4 hour just to show you that. Okay, you can see where price is trading now at 1305. That's where price consolidated not too long ago at the on the initial bounce. So just make a note of it. Draw a dashed line, a dotted line, etc. Just so you're aware of it. The major support and resistance level is in black on my 4 hour. There's the prior support and resistance breakout that we saw recently through the latter part of February. Intermediate trend is down. Notice we see more red on the ribbon on either side than blue, so it's telling we should be looking for shorting opportunities. The 50 period moving average on this particular pair has been used on a number of occasions by price as a resistance level. Are we going to see the same thing today? We are testing 1305. You can see price is now trading on the underside of that. If we want to see price to move higher during the course of this the intraday session, then we need to see 1305 becoming the new support through the European session, and then we could potentially see price rallying to the upside towards that 1500 mark, which happened to be price support and resistance in the past. So very important to see 1305 on our hourly being the new support this morning. You can quite clearly see we had an attempt, but unfortunately we had this evening star as price failed to actually find some support above it, pulled back and then continued back down towards the 1300. We've seen a reattempt overnight, and you can see a bullish start to the Asian session, taking the euro against the US dollar higher, but now it's actually plateaued intraday, so not making it a higher highs because it's now challenged yesterday's high. Okay, it's imperative that we see price making higher highs. It's gone straight into yesterday's high, and in doing so you can see prices pulled back. It is trading on the upper end of the 1305, so a nice bullish engulfing candle here heading into the institution, which is quite close, but the longer it spends above the 1305, the more likely price is going to head towards that magical 1500, which happened to be our prior support and resistance level not too long ago through the latter part of February. So higher swings. Okay, there we go, swinging high at the moment now. So it's important to wait for a nice hourly candle, bullish candle, break high, and look to target 1500 near term for this particular pair. We do have news out this morning, nothing for euro at the moment, so let's leave it as it is for now. On to sterling. Let's have a look at sterling. Weekly, I just want to bring it up really quickly. Why? Because it really factors into where price is trading now. I did a February projection from the all-time high back in early January. Nice shooting star at resistance. Took the high to this consolidation here around the 1700 mark. You can see we saw price selling really aggressively into this area. A nice little support, a little one-day support. A 1 week support, and then price broke again, and then we hit it lower. Sorry. So I took the high on that particular week to that consolidation support area here, and then back up to this bearish engulfing candle, and you can see what normally happens on a Fib projection is you want to see 100% extension of the initial move. So this was the initial move, then the break lower, and it's going to head towards that magical 100%. In the way between the 100 and where it broke, you can see we had the 15300, which happened to be a major support and resistance level on a 2-year time frame. A lot of support through the latter parts of June, July, August of 2010, going into 11 and the start of 2012, and you can see we went straight through that like a knife through butter. So now it's trading at the underside 15300. It's now looking very bearish indeed because we're trading underside. So, and what it did, it headed towards that 100% projection level, and now it's now consolidated at that one during the course of this week. So on our daily, hence the reason why we're seeing a lot of hesitation, sideways motion, a lot of wicks here, a lot of indecisiveness, and you've got to make a note of that. And you can quite clearly see how I did a 78.6 fib. This was 100% fib here at 1505, and the 78.6 fib was at 1502. And you can see prices stalling now between these 2 points. It's imperative prices still to remain negative to see obviously 1505 being breached, but we don't want to see 1520 being broken. Otherwise, we'll know quite clearly that long term we should be seeing 15300, which is the major support and resistance level long term, being reattempted quite soon. So the past 2 days seeing hesitation, very indecisive yesterday in the range. As long as it maintains below 15200, we should be looking for a break of that 1505 to the downside. So on my 4-hour chart, let's have a look and see what the CTC is telling me. Very much red on the other side. The institution is well above price. We have seen consolidation. That all-important 15300, that major support and resistance level, has been broken. You can see that price is still making lower swings. Swing low, swing low, swing low, swing low. They're not lower than the prior one, these three of here in particular, but they are still on the same spot at 15200. So still making lower lows, and as long as that happens, then we should be looking for price to target the downside. We have had some blue, the Natural Temple has gone blue recently, blue arrow, blue candles, and we see the ribbon on the side being blue, but we're not going to be buying because you're buying into a major resistance level here at 15200. And even then, if you start looking to the upside, you could profit to 15300, but there's a lot of risk attached to that. So bide your time, rather get to see price trading well above 15300, or look for that bearish engulfing candle close lower than 1505 to see further shorting opportunities. On to the US dollar Swiss franc. Just going to look at the weekly really quickly. You can see the price is maintaining those highs. I did mention yesterday that we needed to see price using that 940 as a nice support, building on it, and if we do get that, then price is going to really rally. Still negative. You can see quite clearly we only have a blue arrow, and the candle is blue, but this week needs to close higher, and we need to see the remaining part of this particular this template, the blue on either side of the ribbon. But I can guarantee you, the longer we spend more time above this 940, 945 mark, we'll look to potentially take profit here at 970 as we head into that institution before we reattempt those all-time highs we've seen recently at the 1000 mark. So on our daily, want to be made aware of it, 930, that major support and resistance level, long term, there it is. But you can see prices rally through that into the institution, and it's pulled back. Very indecisive yesterday, and it's taking place above that 940. Needs to stay above 940. Nice bullish engulfing candle now would confirm support here above a prior resistance. Get above the institution, get above 945, and then we are in free air. Okay, there's a slight little area here we could probably potentially take first profit very aggressively. This one right here at the top here, if I could draw a straight line, would be great. There we go at 950, just short of 950. But once we get that, the longer it spends above 940, you can quite clearly see the daily now very much in our favor. Blue arrow, blue candles, the shorter term moving averages 20 and 50 have been crossed. The ribbon on the other side is very much blue, but we need to get above this little consolidation here. Stays above 940, happy days, but we need a nice bullish engulfing candle to confirm that sentiment is still looking long, and then we should look to see if we can take it up to 970 in particular, and all the way up to that 1000 for the foreseeable future. The 4 hour, you can quite clearly see the highs haven't got as high, so you can see quite clearly prices pulled back. It's still above that 940. If it gets below 940, guys, and below this intermediate intraday trend here at 935, then we should be targeting back towards the 930 mark, which happens to be our long-term support and resistance. Get below that, head towards an institution, which is now at 925, etc., etc., etc. You can quite clearly see I have my target areas all dressed. Trend insides, mostly blue on other sides, so we should look at buying sentiment. It has done all that. It's broken above a major support and resistance level here at 930. It's broken above a very important consolidation support here at 940. It needs to remain above there in order to see price moving higher. Nice bullish engulfing counter close higher than 945 I mentioned, and then we are in the money. Okay, look at the targets to the upside, 950 short term, otherwise 970 long term, and all importantly the 1000 mark way ahead of us. Last pair of the day is US dollar Japanese yen. Let's have a look at I've got the monthly up here. It's only because I drew these Fibonacci retracements. Let's take it to the weekly. Let me take it back to the month. Sorry, guys. The reason why I drew these in is because I want you to see where price is trading and relative to where we've come from and how these areas have been targeted. The 23.6 here, taken the all-time high back in 2007 to the current low through 211, 212. You can see the 23.6 was roughly around the 87 mark. That's where price stalled to quite clearly in the monthly there. Then the next one was 38.2, and you can see quite clearly now that I put those two areas in. There we go. 940 is one of them. Okay, you can see quite clearly what price has done now on a weekly chart. Stalled big time. The last month, very indecisive. As we headed into this area, people started to take a lot of profit off the table, and sure enough, we had this big pullback. However, price has not moved any further after that profit taking, and if you look at where price is trading now in relation to that, you can see that profit taking took us all the way back to this February retracement. So we took the all-time low here in September to the current high at 94 and change. You can see that the 23.6 was in play. Okay, so profit taking and then moving higher again. So price obviously wants to keep on heading higher, but it needs to show us that in the shape of a nice bullish engulfing candle. The longer this candle over here, or candles move sideways, this candle will end up looking more of a bearish candle. Okay, we don't want to see something like that without any momentum behind it, because this is a very negative candle. Okay, very indecisive. There are buyers, but they aren't really with us, and we want to see that 940 break. Okay, so we need a bullish engulfing candle this week to confirm that they still want to go higher. At the moment now, they are very much heading at the upper end of it, but we don't want to see indecision. The more indecision, the more spinning tops, the more dojis we see, the more likely his price is going to eventually say, listen, yeah, I'm fed up with just banging my head every day. Let's head back, and they'll head back to the first target, which happens to be the one currently here at 950 and change, and 38 back towards the institution, which is down here at 61.8. So very, very important. I take all the analysis, throw it into my 4-hour chart. You can quite clearly see a lot of hesitation, guys, through this. If I just draw you can see quite clearly a box. Some of my students will laugh at me when I say box. I love my boxes. See quite clearly that price is ranged inside this for the whole of February. Not really great. When it did break, you can see not with a hell of a lot of momentum. Very indecisive candles. A lot more hammers here. More price action at the top of the candle than at the lower end. And we wanted to see a bearish engulfing candle. Okay, we didn't get one. We got a lot of indecisiveness instead, and price reverted back up to the upside. So now if it maintains above inside this institution, you can see the institution, all moving averages, everything, including our. The only thing that's not in our favor is we had a red arrow here just recently, and you can see that price is making lower swings. Okay, you can quite clearly see that from this current high above the 9300 mark. Swing low, swing low, swing low, swing low, swing low. So being squeezed. So it's imperative. Are we seeing a indication where price is now moving away from this because of the major resistance level? Are we going to see price folding away? We do need to see a bearish engulfing to confirm that. Ideally, we could use the 9200 as a major target, but get below the institution would start. But you can quite clearly see there's a lot of resistance here. Ideally, you want to be trading above this 9400 mark and below the 9200 mark, because you'll be trading in consolidation. Very aggressive, very wicky. And is it worth it? Not particularly on this particular pair. Okay, so rather stand aside, wait for a break of 9200 or a break above 9400, and then we can sit back at the table and work out where we want to be going next. So that's it, guys. That's my analysis for today. Please follow the rules of this particular template. I'll keep saying it until I'm blue in the face. Back it up with some money management. So important. People have fantastic templates, trading templates out there, but they don't back it up with sound money management. It's worth nothing. Okay, so very, very important. Do your due diligence. Also look at the fundamentals. We are going into a end of a very fundamentally strong week. We've got Thursday. Well, today in particular, we have news out this afternoon, especially for the US market. But this morning we have Mr. Merv King speaking soon at 9:45 a.m. GMT. This afternoon we have the ADP non-farm employment change figures, which leads up into the non-farm payroll Friday. We've got the Bank of Canada rate, the interest rates and that. We've got the overnight rate which is the overnight rate for Canada this afternoon at 3 p.m. GMT. We've got the US factory orders, guys, very, very important. And we've got those crude oil inventories, which actually lends into the factory orders. And then from 7 o'clock this evening, we have the all-important beige book for the US market. So very, very, there's a lot of news building up going into Thursday. There's a hell of a lot of news out tomorrow, guys. So be aware of it. Be complacent. There is going to be a lot of speculation leading up into non-farm payroll. So in my eyes, not trading tomorrow and not trading particularly on Friday because of the non-farm, the first Friday news announcement. So as it stands out, see if there's anything we could trade today. Look to see if we get any bang for buck take your profits when they present themselves, because as we go into Thursday and Friday, you're going to see a lot of speculation, speculative movement, as these news announcements make themselves aware, and you're going to see a lot of up and down because of that. So do you want to be part of it? It's entirely up to you, but if you are going to be trading it, trade aggressively, take your profits when they present themselves, and make sure your stops are in place. Other than that, I'm going to leave it to you today. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.